Hey guys, Boris Loswick from BK Forex. Welcome to our weekly Forex technicals for 4.8 to 4.13 of 2.13. All about yen. I mean, there's just nothing more to say. Yen, 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 yen. It has been an all-out uh, assault on new highs. Past performance not indicative of future results. Trading Forex carries a high level of risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain a loss some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Information, including commentary, trade ideas provided on bkforex.com, should not be relied upon as substitutes for research, which should be formed before making investment decisions. BK4X LLC and Com are merely providing this information for your general information. Information and opinions presented here do not take into account present a particular individual investment objectives, investor situation, and needs. All investors should obtain advice based upon their unique situation before making an investment decision. They should not trade size and leverage of their trading to their personal risk appetite. BK4X LLC will not be responsible for any losses incurred in investments made by readers or clients as a result of this information contained here. We do not render investment, legal, tax, or other professional advice. And such advice is needed. Seek advice from a competent professional. Well, what can you say? It's just been all yen all the time today. One of the most interesting things, of course, is that we had negative news, positive price action. That's just one of the most bullish things you could possibly imagine when the price shrugs off negative news. And of course, when you're looking at the charts, we took out every level imaginable. We are now at fresh year-to-date highs. Here's the dailies. Just to give you a perspective, we took out 96s, 96.5s, 97s, 97 and a halfs. We are way up. And in fact, even on a longer term chart, this is a yearly chart. We're going to go 3 years. And even on a 3-year chart, it is at 3-year highs. So we now literally have to go, let's go to the weekly for 10 years just to basically see where the next level is. And it's really, this is astounding. We haven't been at the 100 level since the 2008 market crash, and obviously that's the next level of assault that I think the market is really looking for. I do think 100 is probably going to be temporary top for the pair. It's gonna, it's just a psychologically tough number, and there's probably going to be some profit taking right around that level. And you can see that's the resistance level here on the weeklies. But that is the natural move of the. As a matter of fact, let me just go to the monthlies because I can't even fit in this data. It should have to go so far back. Let's go monthlies 5 years back, and you can sort of see better monthlies. That interesting thing, by the way, look at this monthlies. 101.43 high tested, ended off the highs, which could very well be the kind of a structure, the repeat that we may be seeing. In other words, we run through 100. Test 101, come right back down. I think 100, 101 is probably the reasonable level of resistance for those who are looking to short off the highs. For now, though, momentum is all to the bull side, ending on the highs of the month. That is just such a bullish frigging move. And as you see, when typically when it ends on the highs of the month, it is just a continuation party here. So yen looks good. There's just nothing in front of it. Obviously, we may have a little bit of back and forth here. The serious level of support here is around 95, 95.50 if you're looking for retraces. Beyond that, it turns into a pretty negative construct. So if we give up 95s, that means we may not have a chance to make 100. But near term, it's just all momentum, all action, all time, and it looks very, very strong. Coming back to reality, now that we have to come off the monthly charts and go right back to the 4-hour charts, and look at the euro. Euro did something interesting today too. Let's come back to the euro here. So euro continued this move, but notice, the euro. I had mentioned before that this 30-50 level was going to be a challenge, and it remains to be a challenge. I think this 30-50 level remains to be a challenge, but I think what's relatively constructive on the euro charts is 27.50 held several times. We held 28.50, 27.50 range, got broken to the upside yesterday. We took it to the next level today. There's possible consolidation here. There's no doubt that we could easily come back to the 29.50, but 29.50 looks to be a relatively decent support from which we broke out. If we break below 29.50 towards the 2900, that's a pretty negative construct. Again, that's basically a double top in the making. But unless and until we take out 29 to the lows, the bias is here to the upside. And of course, the next level of challenges is 30.50. We overcome the 30.50. We fill the gap. It's still a stutter step move, so it's not like it's going to be an easy burst higher. But 30.50, that takes us to 31, 31.50, all those resistance levels. So it's going to be churn and burn all the way up. But the bias clearly pointing to the upside in the euro for the time being, and 29 is the operative level to the downside. In other words, unless and until it's broken, I think it's a reasonable push higher in the euro dollar. Cable followed suit. Cable did an interesting thing today too as well. We've been talking about this 52.50 level for quite a while. And notice, by the way, so we tapped it here, came off. Today's NFPs blew right through it, and that was a big burst. That was a very, very important level to take out. Once we took out the 52.50s, obviously 53s fell. 53.50s now is the resting point where cable ends. But generally, what you see here is we filled the gap. Right, we filled the gap from I don't even know, was it 4 weeks ago? That was a really long time ago. I'd forgotten how long ago the gap was here. But more importantly, we're now in this 53-5,500 zone. This is the zone of recovery from which the cable fell very hard in the beginning of February. So the zone of recovery, I think, is going to be interesting. It's also, I think, going to be a pretty serious. I don't think 55 gets cleared here without a serious battle from the shorts. So those who are gearing up to short into the strength could look at 55 as a relatively interesting reference point. Those who are looking for further momentum, I still think you obviously got another 100 to 150 points worth of upward movement to go. Back down now, 52 former resistance becomes support, and so 52.50 to 5200 now critical level to hold. We got to hold those to the downside, just like with the euro, you got to hold 29 to the downside in order for this upward bias to remain in place in cable. And lastly, Aussie kind of really interesting. Aussie just collapsed today. I'm not sure. I've been off the desk most of the day, so I really didn't follow the fundamental driver. But what's really interesting about the Aussie is, we really came apart here and took down. I think the most natural explanation, and I'm just guessing because I really haven't looked at the news, was the contraction in the U.S. growth. Obviously not negative for global growth, and maybe Aussie just feeling that as on a com dollar basis. Also, all the com dollars had horrible numbers. CADI today, the Canadian data was just really, really horrible. But what's interesting is the 30.50, which we're talking about, 103.50, is a very important support, right? And so if you were a support trader, and we've been talking about this level for a long time, if you're a support trader, then buying here was obviously a very low proposition trade today. Low risk trade today. High probability trade today, and it definitely worked. So I think came down today. The low was what 54, right in front of the 50s support level, and more importantly, it got bought. It got bought back up to the 104s. That seems to be a value zone for the Aussies. So if you're willing to risk the 50 points here, it looks like a support for the near term. We break the 103.50 though. We kind of crumble down here. That opens up and move all the way out to 102.50. So you could have a very, very interesting divergence between euro and the Aussie. And that actually brings me to the point. So euro Aussie was a one-way trip to the downside for a long time. It may very well be an interesting trade now to the upside. It could be a really interesting turn trade. If this 22.50, right? Look at this. That's big resistance here. The trade here, I think, really honestly is a 26. If we clear the 26s, that really opens up a run all the way out to 27.50s. We did make a very nice double bottom here in the Aussie, in the euro odd, but the trade was a big breakout. I think if you see further odd weakness, this is an interesting trade as it continues to rally. Let me just look at the dailies just to get a clue. Yeah, the 26 is a big resistance. It's coming up against the 26s. There's a little bit of a gap here. This is the gap from the month ago. A takeout of the 26s would really put a much more bullish bias into this trade, and opens up the run actually all the way out to 28s. So that's kind of an interesting move. We look at these big moves: 22 to 25, 300 points over the last 2 days. That's a really healthy turnaround. And while we may come back now, so while we may come back and sort of burn and churn, and maybe there's consolidation to 24s. What's interesting about the euro odd is that this is a very, very, I think, strong signal to the buy side, and it's a structure now where you want to be buying the dips instead of trying to sell the rallies, because I think that's the better fundamental posture to take. Anyways, what else? Dollar CAD. Let's just finish up with the CAD because that had big news today, horrendous numbers on it. What's interesting though is look at that. So that's actually kind of interesting. So dollar CAD, despite really, really bad news, you would have thought dollar CAD would have rallied. We came out to 102.50. That's been a big resistance area. We fell back through that. We came back to 101.50. The fact that we're coming back to 101.50, I think, is kind of actually really bullish, and it suggests that basically bullish Canadian dollar, obviously bearish dollar CAD pair. In a sense, it suggests that basically maybe again, the structure of negative news, positive price action, or however you want to look at it, the flip side of it is positive news, negative price action, depending on how you view your trades here. The point being is dollar CAD to the downside still looks like a viable trade, and especially if we take out the lows here, which is around the 101s. A break of the 101s really does open up the move all the way out to parity, which I think is kind of really interesting to the downside. So we're taking a look at here. This also, by the way, looks to be an interesting view at a derivative, right? So the Aussie was weak, CAD was not so weak. So Aussie CAD could have been an interesting. Well, Aussie CAD is just kind of not definitive here. It's really kind of hanging. But if you're longer term, more thematic player, 107 is definitely the reference point to the short side. We're making a lower high here, and the Aussie CAD, if you're trading momentum to the downside, the sell of the 105.25s, the sell through the 105.25s could be an interesting break all the way out to the 104s. So that's a trade, of relative strength of CAD to the Aussie that looks like it's setting up over the next week or so. Anyways, I hope you guys got some good ideas. Please come back and see us at bkforex.com. Please download the free Euro guide if you guys like to take a look at the strategies that we like to trade. Please come in and join us at bkforex.com, where I discuss a lot of these strategies in really, really intimate detail to give you some very, very good ideas. We have had some outstandingly interesting ideas in our private chat rooms this week, and I'd love to see you guys benefit from that. So come on over and join us, Boris Schlossberg for bkforex.com. Over and out. See you guys next week.